Hi, this is Lara at Elliott Wave Gold with your daily analysis for Monday, 6th of April, recording the video today, 4:45 p.m. Eastern Standard Time. I was expecting upward movement for Monday. That's exactly what we've got. I had two targets, the first target at 1212 or the second target at 1223 if that fifth wave turned into a strong extension. That's what happened. The fifth wave continued up to end slightly above the target at 1224.35 and prices turned down since then. We don't have confirmation yet though that minute one is over. We need to see a clear breach of the channel on the hourly chart. When we have that, I will have confidence that gold is in a short-term downward correction to last 1 to 3 days, to show up on the daily chart as 1 to 3 red candlesticks or doji. The trend at minor, intermediate and cycle degree all remains up. The trend at minute degree is down. I'm expecting overall that we're going to see choppy overlapping downward movement to 1207 more likely, but maybe 1196 the next likely end for this correction. Let's look at the wave count at the daily chart level. The main wave count sees a big trend change here at cycle degree for gold and expects that gold is in a new upward trend at cycle degree to last 1 to several years for a B wave. There are more than 13 possible corrective structures a B wave may take. Of all the waves, it is B waves which exhibit the greatest variety in form and structure. So far, I'm confident that this movement subdivides only as a 5. I cannot see a solution for this piece of movement where it's seen as a 3 and meets all Elliott wave rules, so I'm concluding that this must be a 5. It's a leading expanding diagonal. Within a leading diagonal, subwaves 2 and 4 must be zigzags. Subwaves 1, 3 and 5 are most commonly zigzags, and the fourth wave should overlap first wave price territory. So that's why this third wave is labelled ABC. It's a third wave within a diagonal. So we have a 5-wave structure up here, followed now by a complete 3-wave structure down. If intermediate B were to continue any further, because A is a 5, it can't move beyond the start of A below 1131.09. At any stage, a new low below that invalidation point would invalidate this main daily wave count and confirm the alternate. To the upside, a new high above 1308.1 would invalidate the alternate and give a lot of confidence to this main wave count. So far we have a 5-3 and I'm expecting a complete 5-wave structure up for a C wave to complete a big zigzag. At 1320, intermediate C would reach equality in length with intermediate wave A. If price reaches the first target and the structure is incomplete, or if price just keeps rising through the first target, I'll then use the second target. At 1429, intermediate C would reach 1.618 the length of intermediate A. On the way up, it should find some resistance at the upper edge of this big maroon channel, and it may end when price comes to meet that trend line. So far, within intermediate wave C, we have minor 1 and minor 2 as a complete structure. Minor 3 is underway. At 1303, minor wave 3 would reach 1.618, the length of minor wave 1. It's pretty common for gold's third waves to show its corrections for the second and fourth wave within it on the daily chart, so that the third wave will have a really clear 5-wave impulse look. I'm redrawing this little channel around minor waves 1 and 2 now. It's a base channel. Along the way up, the third wave should have the power to break above the upper edge of that channel, and that would confirm that a third wave is underway. Let's have a look at how the third wave is beginning at the hourly chart level where minor 2 ended down. It's this point down here, from this low to this high for minute wave 1, we now have a complete 5-wave structure. 1, 2, 3, 4, 5, with an extended fifth wave, very close to equality in length with the third wave and showing slightly increased upward momentum. This is a fifth wave reasonably typical for gold. It often exhibits swift, strong fifth waves. So we have a complete structure for minute wave 1. It's likely that we'll see the beginning of minute wave 2, but that's unconfirmed. In order to have confidence that we're going to see downward movement for 1 to 3 days, I want to see this trend channel about minute wave 1 clearly breached, with at least one full hourly candlestick below this trend line and not touching it. When that happens, I will have a lot of confidence that we're going to see choppy, overlapping downward movement for 1 to 3 days for the second wave correction. Draw the channel from 2 to 4 with a copy on 3. The fifth wave ends midway in the channel. The second wave, when it breaches the channel, confirms that it's arrived. It can't move beyond the start of the first wave below 1178.59. Because this is a second wave correction within a third wave 1 degree higher, the strong upward pull of minor wave 3 may force minute wave 2 to be more brief and shallow than a second wave would otherwise be. So my first expectation for it to end will be close to the 0.382 Fibonacci ratio at 1207. But if it doesn't end there, if price gets down there and it's not a complete structure, or if price just keeps falling through the 0.382 ratio, the next expectation, somewhat likely, will be the 0.618 Fibonacci ratio at 1196. Minute wave 2 should show up on the daily chart, so it should last at least 1 day and complete at least one red candlestick. It might last 2 or 3 days. At the daily chart level, this is the alternate. Instead of a primary degree trend change back down here, this is looking at what if cycle wave A is incomplete. But if cycle A is incomplete and the fifth wave at primary degree within it is unfolding, then it shouldn't have breached the upper edge of this maroon channel. This is a trend channel copied over from the weekly chart. We have a clear breach at the daily chart level with at least 3 or 4, actually 5 candlesticks fully above this trend line and not touching it. We also have a full weekly candlestick above that trend line and almost not touching it. That's a strong warning that there's something wrong with this wave count. If primary 5 is incomplete, then at 957 it will reach equality in length with primary 1. Within it, intermediate waves 1 and 2 are over, and intermediate wave 3 would have begun within a long extended first wave and a somewhat deep second wave correction, now a complete zigzag. The subdivisions here, 535, are seen in exactly the same way as the subdivisions for the main wave count for this piece of movement. But here it's a second wave correction. The implications are really important. It has a much lower probability today than the main wave count, but I will publish it because the implications, if it's correct, are important, and it is still technically possible. If we see a new low below this 0.1178, if the hourly wave count is invalidated in the next 2 or 3 days with strong downward movement, then this could be a possible explanation. If we see an increase in downward momentum and an increase in volume, we could be seeing the early stages of a third wave of a third wave. But this wave count has a really low probability, mostly because of the trend channel breach, and it doesn't quite look right at the weekly chart level. If this wave count's correct, it really must prove itself this week. If it doesn't, I may very well discard it. If we see another full daily candlestick above this maroon channel, I will discard this wave count long before the invalidation point is breached. Minor 2, if it were to continue, can't move beyond the start of 1 above 1308.1. There are a few problems apart from the channel breach at the daily and weekly chart level, this breach up here. There are some other problems. Here, within minor wave 1, minute wave 4 is more than 13 times the duration of minute wave 2. They're grossly disproportionate, giving this piece of the wave count a rather strange look. And now minor wave 2 is more time consuming and deep than you'd expect a second wave within a third wave 1 degree higher to be, and it's lasted quite a lot longer than minor degree corrections within its impulses usually last for gold. Those two things are again reducing the probability of this alternate. I'm expecting downward movement for both wave counts, but if we see an increase in momentum and an increase in volume, and then we see a new low below this point, then this alternate would be taken somewhat seriously. But not until then. That's all from me today with your gold analysis, and I hope that all our members had a fabulous Easter.